All right, thanks for coming. This panel is about RWA Perps, and we're gonna first go around the table, invite our panelists to give a very brief introduction of what they work on, and what excites them.
Sure. Hi, everyone. My name is Hongye, and I work at G20. So G20 is a market maker that specializes in market making for tokenized projects, as well as tokens, OTC, and treasury management. Before I joined G20, I was in traditional finance, working in fund management. So I have more knowledge on mutual funds and ETF and related topics. So hope to discuss more later.
Hey guys, my name's Fig. I'm a co-founder and CEO of Squid. And Squid's doing cross-chain liquidity across about 100 chains. We focus much more on the spot side of things, so I'll be coming from that point of view. And we work on infrastructure, we work with liquidity providers, DEXs, and then we have APIs which we work with wallets, brokerages, these kinds of front ends who can access spot assets through us. We also have a front end, really well known for good UX. My background was engineering in TradFi and medicine as well, but yeah, that's me.
Hello, my name is Andy. I work at Frax. Frax is basically a USD stablecoin backed by US Treasury bills. We work with institutions like BlackRock, Superstate, WisdomTree, and a lot more. And we basically issue stablecoins called Frax USD.
Hello all, my name's Sean. I'm a BD at StarkWare. So for StarkWare, for people that don't know, we operate a layer 2 on Ethereum called StarkNet. And we have 3 perp dexes that are on StarkWare's tech stack, which are the top 10 perp dexes by volume. That's Extended, Paradex, and EdgeX. So yeah, really excited for this panel.
My name is GM. I'm a partner at Dragonfly, and we're early stage crypto-focused VC fund. So the title of the panel is obviously around RWA Perps, and I thought it'd be interesting to kind of rewind the clock and give a bit more context on where we are today. And in my mind, I think 2025 and 26 in the past, call it 6-7 months, have been really this breakout moment for RWA Perps. And kind of for me, it started around October, where Hyperliquid first announced HIP3, where people can now permissionlessly, or as long as you have 500K hype staked, create a market, basically launch a new asset on Hyperliquid's engine, and that gave rise to people listing gold markets, oil markets, commodities markets, single name equity markets on Hyperliquid. And kind of also, I guess, the breakout moment came earlier this year, where especially during the Iran week oil shock, that was the first time we saw a lot more traders start trading on-chain oil perps during the weekend that most traditional exchanges were closed. And we saw during that weekend, volumes of oil contracts on Hyperliquid exceed $1.4 billion. And to put that into context, it's very comparable to what the type of volumes that you would see on traditional exchanges. And so where we are today, if you look at the latest numbers on the centralized exchange side, we saw Binance perhaps has the highest volume, and right now I was checking their gold contracts and silver perps. They're right now around, call it 10% of what the COMEX silver contracts are, and they actually peaked at almost 20%. A few weeks back, and for the oil contracts, it also spiked up to 2% of what's being traded on the traditional counterparts. And so that's kind of really kicked off this moment of discussion of now we're finally seeing a lot of kind of what the tradition, a long time ago, crypto had always had this premise of traditional assets going to be traded on chain, but kind of we're finally seeing that happen in real life. And so I guess I'll start by asking my panelists, one, are you trading RWA Perps today? And if so, what are you trading? If not, what's holding you back?
Okay, I can start. So yes, as a firm, we are actively trading on HIP-3-4 markets, mostly on oil, gold, silver, as well as some traditional, asset classes, S&P 500, and some stocks. And funny that you mentioned about the war and the fact it has to propel this market forward. So I remember on February 28th, it was a Saturday, and Trump announced that the U.S. is going to join in the escalation of war towards Iran. And, all the traders were like, oh, where are we going to trade? Like, how can we access to, any of this liquidity? And the only place open for business and with a lot of liquidity is hyperliquid. So that's when, all of this, shops run to, and you really kickstart the whole process for oil on the Perps DEX. So yeah, that's we think this is just a beginning.
I haven't been, I don't really trade much anymore while I'm building, but I have been trying all the interfaces because we're really interested in, I think we're going to talk about this later, but whether users should be trading tokenized versions of these RWAs, or they should be trading the perps, and what are actually the trade-offs. If we're abstracting all the chains away in the background anyway, can we just abstract also spot versus perps in a way that makes the user experience really good? So that's where I'm really coming from. But also I did, about 6 years ago, when I got into crypto, at first I was building trading bots on decentralized perps, and I was really excited about this moment. So it's just taken 6 more years for a project like Hyperliquid to come along and actually have the liquidity to be able to make the crypto dream of 24/7 trading, global access, bring much more utility to these assets and these markets.
Yeah, I mean, similar to Fig, I'm not a big trader myself, but I think what caught my attention was, being based in Korea, I saw the COSDEX spike. So that allowed me to kind of look into SK Hynix and all these interesting Korean stocks that were tokenized. But for me, I think I really want to understand before I put in a position or what I'm exactly trading. And doing some researches, I think the reason why I'm not very aggressively trading RWAs is because I don't know what the underlying asset is. Is it just a synthetic wrapper that just projects the future price, or is it the actual? Because it's not the actual ownership of it. So for me, it's more about I need to understand before doing it. So I think it's a break point and a very breaking moment. But I haven't been actively trading myself. Yeah.
Yeah, I have personally, as a retail degenerate, been trading a lot of these TradFi names. Unlike Andy, as a degenerate, I don't understand things before I put money in them. But yeah, I think for a lot of crypto natives, the crypto market, as the crypto market has been kind of in a lull for the past few months. A lot of people kind of moved on to kind of trade equities, oil, metals. And I just see a lot of those trends with my friends as well. I've personally been trading some things like gold, oil, and some Korean equity tickers as well, because everybody in my friend group is talking about Korean equities. But for myself, having been somebody who's just been in crypto and mostly just been trading crypto, the UI and kind of the user experience of kind of using perps is just something that feels natural to me, rather than going to kind of Korean broker. So for me, I think as somebody who's leans more on the crypto native side, I think it just made sense for me to trade RWA perps on perp dexes.
And we were touching kind of into this interesting subject, which is, speaking of kind of the broad subject of RWAs, there's, I would say, basically you can think of it, two ways or schools of thoughts. One is we're just tokenizing, right? The spot asset, let's say you take a Hynix share, tokenize it one-to-one, ideally with sufficient backing, custody, and all that, and take that, being for that share of equity to be traded on chain. Versus, the RWA Perps, what we're talking about today is, this fully synthetic exposure where as long as there's an underlying Oracle price, then you can, through funding rates, balance out the longs and shorts on both sides, such that traders can basically just track the price action, right? And so we're seeing kind of the inflection of the latter, and not necessarily of the former. There are obviously a lot of companies, X stocks, so on and so forth. Robinhood's doing that as well. Kraken is also spending a lot of energy there, but we haven't seen like volume really spike, right, in the purely tokenized equity front. So my next question is for my panelists: do you think kind of the inflection point that we're seeing for RWA Perps like kill the tokenization thesis? Is that dead, or do you think are they both going to be play out?
I think it's a really good question. I think people do prefer spot in the long run, and there's a certain class of investors, just like in TradFi, who'll prefer spot over perps, or not perps, but derivatives in TradFi, I guess. Yeah, I spoke with my friends in TradFi about this, and they thought that yes, spot will eventually have its place. It's interesting though, because I've been looking really deeply into the safety of perps, and a lot of on hyperliquid, it's actually pretty good if you have just 1x leverage. The funding rates may even be lower than the management fee on the spot RWAs. So logically, I'm not sure, but I think like irrationally, almost people just prefer spot. Some people, and it's a different use case, right? Like people trading, trying to make profits in a shorter time horizon. They should go to perps, but people looking for very long-term investments and people who feel less risk on will be going to spot. I think the issue with spot is that just we don't have enough assets yet. Like it's much easier to list a perp if you just have an Oracle price, but spot's going to take a lot of time for everyone to bring their assets on chain. But I'm really optimistic that will happen, because there's the incentives also for each of these like asset issuers to bring their assets on chain will mean that they're going to either maybe deploy their own chain like Tempo and Arc, or they're going to do partnerships on chain that bring their assets on, and then we may end up with more like a larger set of investable assets in spot. And I think once we hit that, then I'll be able to invest in like equities from all over the world and different RWAs just as a spot investor, and I think that hopefully will come in the next year or two. Yeah.
For me, I think it goes hand in hand, to be honest. For me, if anything, I think it helps each other. But I think it's two different things, obviously, right? Like I think with perps, it's more about like accessibility and just, I guess, volume. I think if I can compare it, I think perps will win the casinos and the spot will win the cap table. I think spot is more about like ownership, right? But I think all of this actually takes a lot of time with like legal and tokenizing actual RWAs in spot, because that gives you the ownership of it. When we're talking about perps, again, I think it's just more of a volume thing that will eventually, it's paving its way into spot. So my take on it is that it actually helps each other, but I don't know. We'll see.
Yeah, I think I'm just going to be echoing a lot of the things the other panelists said. I think it's definitely much easier to list perps than it is to tokenize like equities or like traditional assets, because like for traditional assets, to tokenize them you need like an SPV, you need like different like legal hurdles to go through. Whereas in a perp, if you just have kind of like an Oracle price for it, even if like the market is closed, you can do some like internal pricing for like 24/7 day trading. So I think it's just much easier for people to list perps. So it's just much easier to get in the hands of people that want to trade these things as fast as possible. I do think the edge that that tokenized stocks and things like that have, of course, are the things like funding rates is of course a problem for people that are trading perps. I think a lot of especially on places like Hyperliquid, you see that a lot of the funding rates are very, very highly positive, and if you want to hold that position, the price you have to pay is currently still very, very, very large. So unless it is kind of shorter term trades, it's very hard to hold a position for multi months. Although that could be something that could be solved as we mature. I do think currently they like Andy said, they do kind of go hand in hand, not necessarily one overtaking the other.
I think maybe I can just give some examples to kind of summarize what everyone's saying. So I think RWA and RWA Perps serve different purposes. For a trading firm like us that purely want to take economic interest in an asset class for a very short period of time. So for example, if we want to execute a trend following strategy on oil and gold, then for sure we're going to utilize perps. But for example, if I have a family office that want to allocate 10 to 50 million over the weekend to gain some yield, then I would definitely recommend them to invest directly into the RWA instead of perps, because one, you know that there is a ownership structure to the instrument that they're investing in, and second, there's no fees associated with the funding ARBs and etc. So I think there are different purposes, and I think they will both grow in the coming years.
Yeah, and also on a more practical level as well, in practice, what we also see is, in markets that just doesn't have a liquid enough of a market during weekends, in reality, what the RWA Perp venues do is basically they shut off the Oracle feed during the weekend or before Friday close, and just limit because let's say the market is 20x leverage and you basically just constrain the price movement within a 5% band over the weekend. And so in theory, if you have a more liquid and more fluid spot market during the weekend, then that translates into a better Oracle price, then that translates into more frequently traded perp market as well. And yeah, so we obviously have seen this huge uptick of silver, gold, commodities, oil, names, and these single name and these commodities being become extremely popular when it comes to RWA Perps. And beyond those, I'm curious with my panelists, what do you expect in the next 12 months? And I want to be as exotic as an idea as possible that is going to take off when it comes to new listings and new names that will become super popular as that's being traded as perps.
Maybe I can start. So we've been entertaining with the idea of some specific theme, brackets of instruments on perps. So for example, A share theme, ETFs, perps, and maybe cross asset gold and oil, depending on their correlation. So there's a lot of things that people can do and put them together, and because it's permissionless, so it makes it super fun and fast, and we're very excited.
Yeah, I was going to say a similar thing. It's maybe some kind of Chinese equities, because it's going to be harder to get those on spot, I imagine. You can probably hack together some kind of oracle which allows you to invest in things which even crypto spot investors can't access. So maybe something like that. Anything more crazy than that is probably turning more towards the poly market or gambling.
For me, I think it's the NDF market. So that's a non-deliverable forward. So I think it's tokenizing fiats that are restricted to trade as a fiat, but once it's tokenized, it gives you an avenue to kind of trade that on an NDF. And if you look at the volume of Korean won or IDR or whatever fiat there is, it's actually it's insanely high. And I think that's going to be a new breakthrough and maybe an emerging market. But again, like 5 years ago or how many years ago, we wouldn't have imagined an RWA perp. Like that wasn't something that was very in the near future, right? And I think similarly, we're seeing something like with the NDF market. At this point in time, it's kind of a crazy spin and an idea because it's restricted in many ways. But once you tokenize it, I think that gives you an avenue, and I think that's going to be a pretty interesting emerging market. But I might be crazy, so.
Yeah, I think, like a lot of the other panelists said, I think I'm very interested in equities from different markets that I wasn't able to access before. So if I, for example, want to, and interested in a company that's, let's say like in the Netherlands or something, and it's very hard for me as a Korean citizen living in Korea to access a lot of these names. I think what Perps will allow to do is to kind of give access to a lot of the names and tickers that people weren't able to access before, and if there is an Oracle price for it. And I think there will be a lot of things that I can't even imagine that are going to be perpetuated in the future. For example, I didn't expect Anthropic shares to be on a perp market on Hyperliquid, but it is. So I'm really excited to see what the next few months bring, and yeah.
John, is the Dutch company on your mind ASML, or what names do you have in mind?
Oh, it's just an example.
Okay, I was wondering, but yeah, cool. I'm gonna do, I guess, a round of quick fire questions, and so I'm gonna start with, I'm gonna name a pair of names, and I want you to tell me which side are you on. The question is basically, by the end of 2026, who has more market share when it comes to volume in RWA Perps? Do you think it's centralized exchanges or decentralized exchanges? And the context is, right now, it broadly looks like Binance and Hyperliquid in terms of RWA Perps volumes are neck and neck. So by the end of 2026, is it Binance or is it Hyperliquid? Is it centralized exchange? Is it centralized exchange or decentralized exchange?
Hyperliquid.
Hyperliquid.
Shit, Hyperliquid.
This is a full panel of Hyperliquid bulls.
Yeah, I have to root for Dex's, but I may be biased.
Okay, let me ask another question then. By the end of, let's say, 2027, right, next year, if RWA Perps failed or didn't take off as we would expect, why would that be?
Surely regulations would be one, big one. I'm thinking technically that doesn't seem to be a good reason. We work a bit with Ripple Prime, and they've integrated Hyperliquid into their prime brokerage, so you've got good access for traditional teams. Yeah, maybe regulation.
I was actually going to say regulation. Maybe not essentially the fact that it's completely dead, but it might be that RWA Perps lose its hype. I think with Kosdaq, when we saw the huge spike, there was a huge influx of volume in Korea and just elsewhere, having interest in Korean stock markets. But once that dies down, it's going to be something else, right? So maybe the narrative shift could be something, but like you said, I don't think there's anything on the tech side that could kind of get rid of RWA Perps on Texas.
I think if we fail to bring in capital from outside of crypto, because I've been talking to perplexes that are on StarkNet about this, but what is interesting to me was that they said, they were talking to some people that were just trading TradFi, but came onto came onto their platform, for example, for RWA Perps. I think for RWA Perps and just like decentralized perps in general to grow, my inkling is that probably the capital we have in crypto isn't enough, and we need people from outside to come in and be interested and excited about trading perps. So yeah, I think that's going to be kind of like the biggest hurdle for kind of like for success, is kind of like having people from outside of crypto be interested in these things as well.
And maybe one last thing to add is the fairness of the platform. So we know that all of these platforms have internal market makers, DEX and SEX alike. And there have been many incidents where we see short squeezes happen when it shouldn't have. So there is a lot on the fairness side, I think both platforms we need to work on, especially when retail comes in and if they get hurt, and I think that would really destroy people's confidence.
I've got one more actually. Surely a hyperliquid bridge hack. I know that most of the USDC is moving on to HyperEVM, but yeah, I just don't trust much DeFi anymore, and even hyperliquid being so centralized might still get hacked, and that would be pretty bad.
Awesome, I think we're at time, and thanks, round of applause, and thank you for my panelists. Thanks for coming.